Deirdre, U.S. courts are already clogged with a record number of foreclosures, but before long they may get even more jammed up with lawsuits over property rights because of some disgraceful violations in foreclosure proceedings. The banks that have suspended foreclosures as a result include JPMorgan, Bank of America, and GMAC. Moody's Analytics chief economist Mark Zandi is with us now to discuss how significant an impact this is going to have on housing. Mark was an unpaid advisor to John McCain's presidential campaign and now advises the Obama administration in a very unofficial capacity, shall we say. Mark, it is always a delight to have you here on the Inside Track. We welcome you back to talk about this crazy situation in the foreclosure market. 3 banks, I named them. There are some concerns about a 4th, Wells Fargo, even though Wells Fargo says all of its stuff is going to prove to be okay. What ultimately is this going to do to the housing recovery? Just delay it further?
Yeah, I think it just delays the whole process. As you know, Eric, the foreclosure crisis is 5 years in running. And even if things went very smoothly, it'd take another couple, 3 years. And this has the potential for lengthening the whole process out quite significantly. It does depend on how widespread the problem is, and we're finding that out now. And perhaps more importantly, how the courts interpret all of this and how significant the delays are.
Well, very hard for you, Mark, to anticipate how any one judge might act, but based on the fact that these are violations by banks that are supposed to follow very strict procedures when it comes to repossessing a home, how do you think, how would you expect courts on balance will behave?
Well, my sense is, and that's all this is that this is going to delay things by weeks, maybe a couple, 3 months. I don't think it's going to be a couple, 3 quarters or a couple, 3 years. So I think it's weeks, couple, 3 months. If that is, in fact, what happens, then that may mitigate some of the price declines, house price declines I would expect in the very near term. But we will still get those price declines as we move into next year. If it's any longer than that, though, then the price declines that I had anticipated late this year, early next, won't be as significant. But the price weakness, the house price weakness, will extend further out into the future. The housing market won't get going here for longer.
Mark, for those of us following this story, how should we feel? Outrage? Some of these banks were the very same ones that were all too eager to lend to people. Teaser loans, for example, subprime loans. Now, for some of those very same customers, the banks appear to be far too eager to repossess the home, cutting corners in all kinds of ways, signing affidavits without having even read the documentation.
Yeah, well, there's a lot of room for outrage, but in this case, I think it's just that the mortgage servicers, the folks that have to work through the foreclosure process, are just overwhelmed, that there are so many foreclosures and other mortgage problems that they're looking for ways to make this process work a little bit faster and move through the loans. It's not right. They shouldn't do it. And hopefully it's not symptomatic of broader problems. But in this case, I think it's more a paperwork issue than it is something more fundamental. But I guess we're going to have to find that out.
Mark, we're going to come back with you in just a couple of minutes. But right now, your best guess, is it symptomatic of bigger problems or not? And then we're going to continue our conversation on the other side of the break.
I'd be surprised, just because the mortgage service industry has been under extreme scrutiny for such a long time. I'd be surprised if it's
all right, Mark, we're coming back with you. Mark Zandi of Moody's Analytics.